Welcome to Correct Your Tax Withholding Training. In this video, you will learn how to properly use the Internal Revenue Service's tax withholding estimator so that you can properly estimate the correct amount of taxes to withhold from your paycheck. The first step is to go to Google and search for IRS Withholding Calculator. The first result should come from the IRS website. The page is titled Tax Withholding Estimator. Click this link. You are now taken to the Tax Withholding Estimator explanation page. This page explains how the estimator works and what you need to have handy to complete the calculation. Scroll down and click the blue button titled Tax Withholding Estimator. There are 6 sections of the estimator. Section 1. About You. Section 2, Income and Withholding, Section 3, Adjustments, Section 4, Deductions, Section 5, Tax Credits, and Section 6, Results. Scroll below to answer questions in Section 1, About You. The first question asks what filing status will you use for your tax return. If at any time you are unsure about what the question is asking, there are blue circled question marks beside each question that will give a more clarifying explanation. In this scenario, John Kane and Mary Kane are married filing jointly. The next question asks, do you, or will you, or your spouse have a job or a pension that regularly withholds federal income taxes from your paychecks or pension payments? The Kanes answer yes. The Kanes are next presented with 4 questions and asked to select all that apply. The Kanes have 2 children, so they check the I plan to claim dependents on my tax return box. None of the other options apply, so they click Next. The Kanes are now taken to Section 2, Income and Withholding. They are asked, how many jobs will you and your spouse have this year in which federal income tax is regularly withheld? Include past, present, and future jobs. John has 1 job and his wife Mary has 1 job. They enter 2 as their answer. Next, they are asked to describe their first source of income. John selects salary. Another question appears and asks, this income source is for? John answers myself. The next question asks, select what best describes when you earn income from this job. Since John has been working there since the beginning of the year, John answers, all year. The next question asks, how frequently are you paid? John is paid every 2 weeks. The next set of questions require John to have his most recent pay stub. When did your most recent pay period end? John looks at his pay stub and it shows April 14, 2024. What was your most recent pay date? John's pay stub shows April 20, 2024. Enter wages or salary per pay period. John's gross wages, before taxes, are $2,800. Enter wages, or salary year-to-date. John enters his year-to-date gross earnings at $22,400. Based on the information provided, it looks like your expected annual income from this job is $72,800. Is this correct? John answers, yes. Next, John enters his federal taxes paid per pay period is $302.19. He also enters $2,417.52 as his federal taxes paid year-to-date. The estimator asks John to select any other situations that apply to this job. There are none. John selects none of the above. John now clicks the down arrow to enter the second income source from his wife's job. He is asked to describe their second source of income. John selects salary. Another question appears and asks, this income source is for? John answers, my spouse. The next question asks, select what best describes when your spouse earns income from this job. Since Jane has been working at her job since the beginning of the year, John answers, all year. The next question asks, how frequently is your spouse paid? Jane is paid every 2 weeks. The next set of questions require John to have his wife, Jane's, most recent pay stub. When did your spouse's most recent pay period end? John looks at Jane's pay stub and it shows April 14, 2024. What was your spouse's most recent pay date? Jane's pay stub shows April 20, 2024. Enter wages or salary per pay period. Jane's gross wages, before taxes, are $2,400. Enter wages, or salary year-to-date. Jane's year-to-date gross earnings are $19,200. Based on the information provided, it looks like your spouse's income from this job is $62,400 this year. Is this correct? John answers, yes. Next, John enters Jane's federal taxes paid per pay period as $135.38. He also enters $1,083.04 as Jane's federal taxes paid year to date. The estimator asks John to select any other situations that apply to this job. There are none, so John selects none of the above. The estimator asks about other sources of income. They have none, so John checks the none of the above box. Finally, the Cains do not have any withholding from other sources of income or estimated tax payments. John leaves both boxes blank and clicks Next. John is now taken to Section 3, Adjustments. John reviews the different options for adjustments to income. Since they have none, John leaves all the boxes unchecked. John clicks Next. John is taken to Section 4, Deductions. John is asked if they plan to take the standard deduction or if they will take the itemized deductions. John knows they do not have enough itemized deductions to equal more than the standard deduction, so he answers no, just use the standard deduction. John clicks Next. John is taken to Section 5, Tax Credits. How old will you be on January 1st of next year? John answers 32. How old will your spouse be on January 1st of next year? John answers 31. John is asked to enter the age for each dependent they wish to claim. John and Jane have 2 children ages 11 and 12 that they claim. John enters 11 for one child. John clicks Add another child and enters 12. The estimator asks John if they have child or dependent care credit. The Cains do not, so John leaves the box at 0. The Cains have no qualifying work-related childcare expenses, so John leaves the box blank. John enters the number 2 for earned income tax credit. The Cains do not have any adoption tax credit, so John leaves this box blank. The Cains do not qualify for any other tax credits. John scrolls to the bottom of the page and clicks Next. John is taken to Section 6, Results. John discovers their expected tax withholding for the year will be $11,366, however, their anticipated tax obligation is only $9,426, which is $1,940 in overpayment. Their projected refund from the IRS will be $1,940. John and Jane do not want to overpay in taxes. With 8 months left in the year, the Cains could see a monthly paycheck increase of approximately $242 per month. The Cains decide to change their Form W-4 so that they can use their money now instead of waiting for a refund. Scrolling down the page, the estimator gives the Cains instructions on how to adjust their Form W-4. However, the IRS has done the Cains a favor by presenting them with pre-filled Form W-4s that already have the numbers needed. John simply needs to download his Form W-4, complete his personal contact information, sign and date, and present it to his employer. And Jane needs to download her Form W-4, complete her personal contact information, sign and date, and present it to her employer.